Opening night on the Seine River. A family tunes in for free on broadcast TV. A subscriber streams seamlessly on a premium app. A corporate entourage toasts in an exclusive riverside suite. One electrifying moment, 3 distinct revenue streams. That's the essence of the modern Olympics captured in a single snapshot. We're not tallying medals here. Instead, we're cracking open the financial playbook, dissecting how the games generate billions, who shoulders the risks, and why the most valuable assets, legacy infrastructure, data rights, and global branding, linger long after the athletes depart. With the International Olympic Committee, IOC, redistributing 90% of its revenue, equating to roughly $4.2 million US daily to stakeholders during the 2021-2024 cycle. This isn't just sport, it's a sophisticated economic engine. 1. The Olympics are a platform, not a 2-week event. Forget the outdated notion of a singular spectacle with one revenue till. The Games operate as a multifaceted platform. The IOC orchestrates from the apex. Broadcasters and streamers vie for global reach, shelling out billions for rights. Brands secure visibility through sponsorships. Host cities provide venues, narratives, and infrastructure. Fans fuel demand via tickets and engagement, and hospitality partners capitalize on scarcity for premium margins. Funds flow cyclically, priming well before the torch ignites and persisting afterward through merchandising, tourism boosts, and media archives. For instance, the IOC's funding model funneled around $2.8 billion US towards staging the Paris 2024 Games, easing host burdens while ensuring broad stakeholder payouts. Once you grasp this platform dynamic, the focus shifts from, did ticket sales cover costs, to, how effectively did each side monetize their role? This ecosystem generated an estimated $1.43 billion in annual sponsorship revenue for Paris 2024 alone, underscoring the platform's scalability. 2. Experience beats ticket price. A standard ticket grants mere access, a seat in the stands. True hospitality elevates it to an unforgettable narrative, bundling elite viewing with VIP concierge services, bespoke city tours, athlete meet and greets, and tailored corporate hosting. This shifts the paradigm from flat pricing to maximized per guest yield, transforming, once in a lifetime, into a high-margin product line. That's why the IOC has centralized and professionalized official hospitality programs, ensuring consistent quality and revenue capture. For sponsors, the takeaway is clear. Invest in proprietary moments that transcend replays, like exclusive behind-the-scenes access or branded athlete interactions. In Paris 2024, over 12 million tickets sold generated €1.333 billion in revenue, but hospitality packages amplified yields by catering to premium segments, contributing to the event's overall €4.48 billion total income. This approach not only boosts immediate returns but sustains long-term fan loyalty. 3. The biggest line item nobody books, volunteers. Beneath the glamour lies a silent subsidy, volunteer labor. Tally the hours contributed, apply a modest local wage rate, and the figure balloons into a shadow economy that could reshape public discourse. For Paris 2024, 45,000 volunteers powered operations, their collective effort valued at tens of millions, echoing Sydney 2000's estimate of at least $60 million for 40,000 volunteers. On the books, host cities spend nothing. In truth, society invests through donated time, often from those who can afford to forego paid work. This isn't a critique of volunteerism's altruistic spirit, it's an acknowledgement of its economic footprint. By quantifying this invisible input, bids become comparable on level ground, revealing how such contributions offset formal budgets and enable grander spectacles without explicit taxpayer hikes. 4. Soft power has a CAC. Hosting the Olympics is akin to launching a colossal national marketing blitz. For cities eyeing surges in inbound tourism, foreign investment, and international students, the Games serve as a hyper-visible awareness driver. But valuation demands rigor, not rhetoric. Calculate incremental visitors multiplied by average stay and daily spend to derive lifetime value, LTV. Then, Divide public expenditures by that LTV to yield the customer acquisition cost, CAC, the true price of securing convertible global attention. Successful hosts, like Barcelona post-1992, sustain multi-year booms. Others, such as Athens 2004, experience fleeting spikes before reversion. Rio 2016, for example, drew over 500,000 international visitors, injecting about $1.2 billion in tourism revenue, yet broader economic analyses show mixed long-term returns. Design with longevity in mind. Integrate reusable venues and cultural tie-ins to extend the funnel beyond the event horizon. 5. Risk doesn't vanish, it moves. Budget overruns and unforeseen disruptions aren't anomalies in megaprojects like the Olympics, they're inherent. The astute strategy isn't evasion but allocation, mapping risks across stakeholders. Taxpayers often serve as the ultimate backstop. Insurers handle catastrophes. Suppliers absorb via milestone delays, dynamic pricing on tickets and hospitality flexes to market shifts. And media deals extend with bonus inventory or sponsorship add-ons. Paris 2024's initial $8 billion budget swelled by several billion, yet organizers mitigated through revenue levers, culminating in a €26.8 million surplus. Effective committees slice risks finely, sequence them temporally, and pre-allocate to resilient balance sheets, turning potential pitfalls into managed contingencies. 6. Rights 2.0. The data gold rush. Broadcast rights have long been the Olympics' golden goose, amassing billions for the IOC. Now, data rights promise even greater resilience, encompassing real-time timing, athlete biometrics, archival footage, multi-angle streams, exclusive behind-the-scenes content, name image likeness, nil, deals, and remixable short-form clips. By atomizing and repackaging these assets, ethically and compliantly, the IOC and partners unlock extended revenue tails. This diversification future-proofs the model without overburdening fans, as seen in Paris 2024's enhanced digital offerings that boosted engagement and ancillary income. With total IOC revenue redistribution hitting $2.8 billion US for staging support, layering data monetization could amplify this further. 7. LA28's bet, light assets, heavy monetization. Los Angeles 2028 embodies a paradigm shift. Asset-light operations with aggressive revenue capture. By reusing existing venues, maintaining a lean organizing committee, and converting physical spaces into sponsorship canvases, via naming rights trials and immersive brand integrations, the plan minimizes capital outlays. In essence, erect less infrastructure, sell more experiential context. With a projected $7 billion budget already 72% committed through IOC advances and partnerships, LA aims for profitability without taxpayer bailouts. If successful, this no-build ethos, leveraging temporary setups over permanent builds, could redefine hosting, prioritizing fiscal prudence and upside retention for the platform. 8. The second screen and the betting curve. The primary screen captures the raw thrill. The secondary, your smartphone, unlocks monetization in real time, delivering live stats, customizable cameras, viral social clips, micro-subscriptions for premium views, and, in permitted markets, integrated betting or fantasy elements that prolong sessions and elevate average revenue per user, ARPU. This evolves passive spectatorship into interactive ecosystems, ripe for sponsor tie-ins and streamer upsells. Far from gamifying sport excessively, it harnesses tech to deepen value, as evidenced by rising digital engagement metrics in recent games. 9. The security afterlife. Olympic security extends far beyond the fortnight. Deploying sensors, AI-driven crowd analytics, upgraded communications, and centralized command hubs that often integrate into a city's enduring fabric. Vendors relish the multi-year service contracts. Cities must budget for ongoing maintenance and tech refreshes. Security costs routinely surpass $1 billion per Summer Games since 2004, with Paris 2024's tally embedded in its €4.45 billion expenditures. Dubbed the fiscal afterlife, this legacy demands foresight, redeploying assets for everyday events like festivals or emergencies to justify the investment. 10. Judge the games on 3 statements, not 1. An organizing committee's isolated profit-loss snapshot misses the mark. True success demands scrutinizing 3 financial lenses. 1. Operations P&L. Did the event break even or profit, like Paris 2024's €26.8 million surplus? 2. City balance sheet. Did investments in housing, transit, and venues yield recurring value, avoiding white elephants like those post-Athens 2004? 3. National brand cash flow. Did uplifts in tourism, talent influx, trade, and investment endure, as in Barcelona's post-1992 boom, or fizzle like Beijing's $3.6 billion revenues against $40 billion costs? Alignment across these signals victory. Misalignment spells hidden losses. So what are the rings really selling? In the arena, the Olympics peddle pure emotion. In the accounts, they engineer precision of moments, rights, risks, and repurposed assets. The archaic build and pray era yields to reuse, monetize, hedge. To glimpse the future, look beyond the torch, track the enduring tale and its stewards. Stay curious, stay sharp.